Hello, everyone. This is Andrew Berman. Welcome to an NMP webinar. We bring you the non-QM town hall, and with me, I've got three legends in non-QM. I am a legend in non-QM only by osmosis because I hang out with these amazing guys right here. We got John Wise from NewFi, Tom Davis over at Deephaven, and the legacy, the Brian Dacey over at ACC. All right, gentlemen, thank you guys for joining us. Everyone, before we get started, everyone, take out your cell phone, put your phone on mute, off. I promise you, we will be in and out of this in an hour or less. We will try our hardest not to go over. We got a lot of things to cover today. We're gonna first. I've got a poll. I got some questions. Gonna ask you guys, just get an idea of your level of business planning. We're going to first just do a quick state of non-QM, just kind of talk about what's going on, but in non-QM, and then we're going to get into business planning, because one of the things that we've gotten a lot of feedback from our audience is, how do you get these loans in? You're coming across opportunities. Sometimes they're strategic. You're finding them intentionally. Sometimes you're just stumbling across them. So I want to actually get an idea of whether you have a plan, to attack non-QM, and we have some content today to kind of give you a bit of a strategy. But I'll tell you, at the end of this call, you should connect with these guys, because one of the best things you can do, I'm telling you right now, is work with their account executives on helping actually stay committed to a plan. They have resources. They've got all the tools to help you execute a non-QM plan, so you can really ramp up. And I'm going to kick it off with a poll. You guys don't mind when we launch this poll right here? All right. So first question, do you plan on doing mostly agency but open to non-QM? This is for 2024 plan production. We'll look for non-QM. Plan to create strategies to find non-QM loans, or already doing a lot of non-QM but plan on ramping it up, or you'll be on 2024, you're going to be focusing on non-QM and doing a significant effort towards non-QM. And I'm just also curious if you do business planning, and it's interesting. And we were talking about this last week. And a lot of people, they'll do business planning and then they won't look at their business plan until December. So one of the things we talked about this, and these guys generously donated the time of their account executives to help keep you accountable. So if you have a business plan, share it with your account executive. They'll give you insights. They'll teach you actually, what's possible, what's not possible, and they'll help kind of keep you accountable for this. So we're going to keep this poll open. We've already got about 43% of the room open. I'm going to keep it open for another 5, 4, 3, 2, and 1. All right, closing the poll. I'm going to share the results here. Oops. Hold on for a second. Ending the poll and getting a survey error here. All right, hopefully ending the poll. And that's very weird. Zoom's not letting me end the poll.
It wants you to keep talking, Andrew. It's just the universe telling you to keep talking. That's what it is. Hey, while you're figuring that out, I'm just looking at some of the results on the screen, and look, the great news about the poll is that most of you are open to doing non-QM business and looking for different strategies. I think that's the good news. But I want to just go back to the one thing Andrew said, which I think is really important. We're going to spend some time talking today about planning and goals and establishing those goals and looking back, and anytime you do that, Andrew mentioned it. Our account execs would love to be that accountability partner. But if you choose, if that's not who you choose to have someone, a friend in the business, a friend outside the business, a spouse, somebody to look at these goals with you on a regular basis, to hold yourself accountable to the action items that are in place. And I think that's is always in my life always been a great piece to have as part of your planning. Just have someone there to bounce it off of and hold you accountable for the action items.
Fantastic. All right. Um, it's not letting me display the poll. Hopefully, if someone just can hit me in the chat box, tell me if you still see the poll on your screen. Hopefully you shouldn't. But we just want to no. Okay, fantastic. Good. Okay, so we can proceed here. All right. But yeah, I think it's business planning super important. Always good to have a plan because a failure to plan is a plan to fail. All right, so gentlemen, I'm going to kick this off with the state of non-QM. One of the things I want to talk about, and what's one of the cool things about that non-QM has brought us. We were just talking about this. I mean, this non-QM is really well. I know we could look at the products that were previously outside of the box, kind of were not necessarily non-QM, but non-QM, the official term, has only been around for about 10 years. Not even 10 years. If you look at actually the first companies that started offering non-QM products. But as time has gone on, we've gotten more innovative. And one of the things I wanted to talk about, John, you guys just launched a new program. Talk a
Yep.
little bit about the graduated mortgage payment, I believe is called.
Graduated payment mortgage. Yeah, that's right. GPM. It's we took an old product and made it new again. And we think we made it new in a way that's better than what we had before. A lot of some of you that have been in the business for a very long time know what graduated payment mortgage is. Some of you who have not been in the business, it's really a simple concept. It's trying to drive the payment down during the first 5 years of the loan to the levels that we think are significantly below current agency rates. And so in the first 5 years of the loan, you have a payment that's less than the note rate. And in the first 3 years of the loan, the payment's actually lower than IO payment. So if your borrowers like interest only loans, we think this is a better option. It allows them to make a lower payment than interest only. And what happens then is you have some deferred interest that happens over the first couple years of the loan. And the old graduated payment mortgage had caps of about 25% of the original balance. This loan caps out about somewhere between 1.5% and 3% of the original principal balance. And then
Wow.
in year 6, it resets to a fully amortizing loan. But we actually don't think these loans will be on our books into years 5 and 6. We think rates are going to come down here in the next couple of years, 2025, 2026. And we think these loans will probably pay off at that time when you can get them into a better fixed rate loan. So really, the concept here is it's almost like a 2-1. What I'm calling it is a self-funded buy down. It's the borrower basically using their future equity to supplement their payments today. You get to pick up all of the advantage, and you're basically borrowing your own equity. And there's no prepay on it. It's a fixed rate loan, so it doesn't come with the same bells and whistles of the old option arm GIPM, as somebody put in the notes. This is a fixed rate loan with no prepay, and we think it's probably one of the most creative new products in the mortgage business today. So we're excited to. We just finished a webinar yesterday, our second webinar on it. If anybody wants any information on it, they can always email me. I'm sure Andrew will post that information in the chat at some point during this process.
Yeah, fantastic. No, it's
And
great.
it's exclusive, by the way. This is a product that really nobody else is selling.
That's awesome. Tom, you want to talk a little bit about some of the things you're seeing in terms of product innovation out there?
Yeah, I think if what we're seeing a lot of traction is in business purpose lending. Basically, we allow the originator, if they're a couple things, right? We allow the originator to close loans in other states if they're not licensed in another state, because it's a business purpose loan. So if you have a broker in California, they want to close loans in Texas, but they're not licensed there, they could actually close loans in Texas without being licensed. So it gives the broker that competitive advantage. If you look into the DSCR space, right, or investor space, year to date, there's about 26% of the purchase transactions year to date are investor loans, so a quarter of the market. So this is just an extra feature for those who are focusing on investors. It gives them another tool to help professional investors that might have portfolios, or folks that are looking to purchase in other states, right? So that's a great opportunity. We're seeing an increase there in production, and also we allow to take the application and close the actual loan in an LLC. So for more of your traditional investors out there, and professional investors as well, the LLCs, what makes us unique in that space is we can go up to a $10 million exposure for one borrower. A lot of investors or competitors out there might go to 5 million or 7 million, but we could go up to 10 million exposure for one borrower. So we're really focusing on those professional investors.
Fantastic.
Yeah.
Brian, I don't know if you want to add anything about in terms of product innovation that you're seeing out there.
I really don't. I think these guys have made some great points about, in John's case, a really specific new innovative product. And Tom does a great job always describing, DSCR and business purpose, and how everybody should have that in their arsenal. But I think I like to focus a little bit on like the polling, folks that are interested in making the transition into non-QM as part of their plan for next year and going forward. I think for those that have not been in the non-QM sector, but in the business for a while, should, in addition to creating a plan, part of that plan should be what you alluded to, Andrew, in the prelude, was training and education. And I think one of the guys said it. I think partnering with a trusted account executive that works for a company that has had success, like any one of the guys on the call, is probably the best thing you can do to make that transition. Oftentimes we talk to folks that have been in the business a long time, but have never done a non-QM loan, whether they've only done agency type loans, scorecard loans, AUS, LP, all that good stuff. The reality is that if you were in the business prior to AUS, you understand sort of the blocking and tackling of loan packaging. And getting back to that is important, but there is a whole subsection, I think, of originators who are new, quote unquote, to the business, and are really focused on AUS findings and not necessarily understand how to see the deal. And I think if you talk to your account executives, yeah, they're talking about product and price and service, all the three really important levers that most everybody sort of defaults to. But I think it's probably more important to understand how to package the loan. It's one thing on paper to have the characteristics to meet the criteria of the loan that any one of us offers. Understand how to put the loans together, whether it's bank statements, which can be complex, but we try to offer solutions to make them more easier to digest. We have some AI offerings that help the brokers understand how we look at income. So I think you want to partner with your account executives, get someone that's trusted, that works for a trusted, reputable company, to demystify some of the blocking and tackling that's needed. Credit capacity, collateral, all those things really are the way to divert, I think, your energy in the non-QM and being successful. So training, all webinars like this, you're going to pick up some sort of nugget along the way. Probably really important to build that base if you're going to transition into like training and education.
So what do you think actually it takes to get more industry acceptance? Like how do we, and what can brokers do that are out there? And I know we're going to talk a little bit about this in terms of like business planning, but Brian, I know you're big on education and training. Like what can brokers do to get out there to get more industry acceptance? So we're here. We know actually non-QM is a great place to be. We're talking about the state of non-QM, but how can we share this message with the real estate agents, referral partners out there?
It's a good question. I think there's a lot of sort of bad misinformation about non-QM in the marketplace. Oftentimes you'll talk to someone about non-QM and they'll say, oh yeah, I did subprime loans back in the day. Well, the reality of it is, Dodd-Frank introduced non-QM in 2010. right? And the biggest component to non-QM in Dodd-Frank is ATR, which didn't exist in subprime. So I think the things to focus on are the differences, skin in the game. The weighted average LTV, I would imagine for everybody on this call, is probably in the mid 70s, right? And we're no exception to that. So you've got skin in the game, you've got ability to repay, and if there's benefit to borrower, you can make a loan. So there's a lot of misconceptions about non-QM. People sort of overlay subprime nomenclature into non-QM, which I think is a big mistake. So again, getting in front of your referral partners, a lot of folks are going to talk about getting in front of realtors. Not a bad move. I think it's something that everyone does. If I'm an originator, I kind of want to observe the masses and do the opposite. I'd say, hold your own first-time home buyer seminar. Educate folks that are self-employed, folks that are not citizens, folks that that want to buy a business purpose type property. Generate some leads, educate the consumer base, then turn those leads into a realtor you're trying to partner with. It'll strengthen your relationship, help you educate the consumers prior to being in the hands of a realtor who doesn't understand the financing. They think they do, but they don't. And so I think that's a good way to look at that.
Hey, Andrew, if I could just add a couple more things to that. That's a great, a great summary, Brian. But a couple things. I think we've kind of jumped the shark here on educating realtors on non-QM for two reasons. One is if you look at the largest cohorts of borrowers of non-QM product, DSCR or bank statement loans, one of the largest cohorts is realtors. They are one of the largest users of this product. They're a perfect candidate for both DSCR and bank statement loans for obvious reasons. But the other thing too that I think that's interesting is that if you're a listing agent and you receive 5 offers, all of them financed, you're gonna know the FHA offer, you're gonna know the VA offer, and then the rest are gonna look like conventional loans. You're going to have no clue that one of these loans is a bank statement loan or one of these loans is a DSCR loan. The offer is going to look exactly like a conventional loan. So from a listing agent standpoint, they don't really have to be educated. They have a pre-approval. They have a down payment. We've talked about on this webinar several times. If you look at the makeup of the non-QM portfolio of loans as a whole, they look almost identical to an agency loan. 720 credit score, 70 to 73% loan to value, performance about the same. So these loans look exactly like agency loans. And from a realtor standpoint, I just don't think we certainly have education to do on a regular basis, but I think there's more education of loan officers still needed, not necessarily realtors.
Yeah, well, just a final nugget. What we encourage our originators to do is become a master of non-QM, to become in their market. Just like the originator got licensed to become and they had to go through testing and pass that testing. I highly encourage everyone on this call that's listening, get your guidelines or your matrices from your investors, learn them inside and out, and become a product knowledge expert. Just like any other business or trade out there, whether you're an electrician, a surgeon, or a wealth advisor, whatever it is, if you master those guidelines and you know how to structure deals and you're really confident in that product offering, then you'll be confident in selling that product to the realtors, to self-employed borrowers, to investors, to you name it. So you have to become a product knowledge expert, because if you're not, and the realtor picks up the phone and they call you, and you're not confident in that product offering, they're not going to call you. They're going to call Tom, or they're going to call Brian or John, because they're product knowledge experts, right? So they could sniff that very easily if you're not a product knowledge expert. And if you're really good at what you do and you know those products inside and out, and you know how to structure it, and you know how to help close more loans and just find ways to get those loans closed for those realtors, your phone will not stop ringing from 8 o'clock in the morning to 9 o'clock at night. I know our sales team, and I'm sure John and Brian, your number one AEs or top 5% AEs, their phones don't stop ringing, and one of the biggest reasons is because they're product knowledge experts. People rely on them for their expertise. So that's a huge opportunity for everyone on this call and their target markets. If there's not a person in your backyard that if someone thinks of the word non-QM and there's not that LO who is the person who's known in that market as the non-QM expert, then that's an opportunity for you to become that person and market yourself, right? So I think this call, we want to talk about business planning and, obviously setting goals, objectives, evaluating the market that you want to go after, how you market to those borrowers, and building a business around non-QM, right? And driving and becoming that go-to person and building a plan to be that go-to person. So to me, this is an exciting webinar because I think there's a ton of opportunity in this market. I think there's a lot of tailwinds in non-QM going into next year. And I think there's going to be huge opportunity for those who focus and are dedicated and master this business, because all the other folks around you, if they're not paying attention and they're not focusing on it, you're just going to eat their lunch and you're going to take their market share. I mean, for us, we're coming off back-to-back record months. Our scenarios, we haven't seen scenarios to our structured us the highest point ever in 11 years of our company's history.
Wow.
Submissions, locks, fundings, everything going into the fourth quarter is not slowing down for us. We're taking our Q1, Q2 hiring plan for operations and fast forwarding it right now because things aren't slowing down. But once again, we invest a lot of time into our clients and we're talking to our customers. I know just like John and Brian are educating them and creating a business plan going into the next year, saying this is what you guys need to focus on. If you don't have a plan, let's help you build that.
So Laura says you are on fire, Tom. I agree. I mean, it's something we should be fired up about this. There's a huge opportunity here, and the bank MLOs are not able to take advantage of this. We've talked about actually how there's even opportunity with those guys. I want to. So one of the questions that Patty asked when she was signing up, I love this question because I want to know if you guys are seeing people doing this where they're dedicating resources to non-QM and just doing that. So what Patty asked is it possible to be a non-QM specialist and only do that? I'd love some training on that.
We would love to help you at Deephaven. We're doing 100 webinars a month. You tell us where you want to focus and what market you want to focus on. We'll help you get there. We do it all day long. That's part of our business plan, is investing in our customers and helping them, drive their production and helping them build a plan to do that. So,
and I think there's two pieces to that question. There's just the loan officer themselves, and our most successful loan officers today, the ones that are succeeding at a high level in this market, are the ones that are focusing 100% of their time and energy on non-QM business. You can absolutely make a living on just focusing on non-QM. So certainly from a loan officer standpoint, if that's your plan, it's a good plan. Certainly until rates come back down or business or we get out of this kind of deep freeze, real estate deep freeze that we're in. I think it's an excellent plan. But the other question I think that's also important is if you look at it from a company standpoint, there are companies that do this differently. So some companies will actually take a person or two or a group of people and focus solely on non-QM so that they have an expert within the organization. And that way loan officers can go to those people to get help and support. Certainly all of us will do it for you. But there are companies that are breaking out non-QM divisions within their organizations that focus solely so that they can be an expert and train their loan officers individually. So either one works. There are also companies that are solely focused on non-QM origination, non-agency origination. Lots of really good customers of ours and others. That's all they do as a company. They're not spending any time looking for agency refis or agency purchases or other things. They're focusing solely on some of the things that we're going to talk to you about today in terms of developing a bigger referral source, a larger, different referral source than you have today. And then just one last piece before we get to the planning that I think is really important is the non-QM referral is, we think, 10 times more valuable than closing an agency transaction. An agency transaction can get closed anywhere. The non-QM borrower, generally speaking, has been declined multiple times because they don't qualify at your other agency lenders. And so this non-QM referral is valuable for two reasons. One is you've solved a problem rather than just giving somebody a better rate. Okay, you've solved the problem, and that solving of the problem, it allows that borrower to invest back in you, and they tell that story to multiple people. But the other thing that's interesting is you look at kind of the largest subsets of non-QM business, kind of bank statement loans for self-employed borrowers and investors for DSCR. If you look at those two groups, self-employed borrowers generally hang out with other self-employed borrowers. They are in a group together, and they know each other and they talk to each other, and that's how that referral starts to grow by 10 times. Same thing with investors. If you do a really good job on helping an investor acquire another property and getting financing, they're going to tell that story to their other real estate investor friends, and it will like Tom said, your phone will be ringing on a regular basis.
Hey, Andrew, real quick point, just backtracking a second to the subject matter expert piece in terms of what Tom started talking about. Yeah, that's super important. I think something that's often maybe overlooked is not only creating subject matter expertise in sales, but if you're working in an environment where you're the only subject matter expert in sales, you're gonna have to pass that on to the support team. Because oftentimes we'll see, new brokers that are, new to the industry, or at least this sector of the industry, and their heads spin when they see a conditional loan approval that's, got bank statements on it, or DSCR or I-10, something like that. So we don't want to overlook the support team. So add that expertise, that training and education into your arsenal. Pass that on not only to your sales team, but your support team, your internal customers. Make sure that they become experts in manufacturing loans. So when they're delivering a loan to Deephaven, Refi, or ACC, it can actually make its way through the system.
Fantastic.
Well,
All right.
one other thing, just to piggyback on Brian and what John said as well, and real quick, a lot of companies, Brian, you said there's companies that are doing agency production that happen to do non-QM and are dabbling in non-QM. I can tell you those companies don't have the expertise or the experience or the focus that a Deephaven has, or an UFI or an ACC. This is all we do. And so a lot of companies that are working with us, and the reason our business is growing, all of us on this call, is because we have that expertise, and people rely on us for that expertise. So I actually have agency, shops, investors, large investors reach out to us. I'm sure they've reached out to John. Hey, we don't have a training department to help our LOs or our customers. Can you refer us someone to help us, because we don't have the expertise? It takes years to build this, right? So not only the scenario desk, there's years and years of experience at the scenarios, the marketing piece, the business planning piece, how to structure deals, right? All that is once again, we've been doing this for over 10 years versus someone that's just dabbling in it. If they're just dabbling in it, they're not going to be as successful as someone who's maniacally focused on this business or this type of business.
Yeah, 100%. I'll tell you one thing, and then no more piggybacking. We're going to go on to business plan, but I'll tell you, I've most of the cases where I've seen where originators have had negative experiences with non-QM has been actually when they haven't worked with dedicated non-QM lenders like these three guys here. And not saying there's others that are out there, because some of them advertise and sponsor our events. But I'm telling you right now, people I've seen that have had issues have not dealt with dedicated shops like these guys. So, all right, well, we're gonna break this down into going to talk about the target markets that are out there. We're going to talk about what are the opportunities. We're going to talk about messaging. Like how do you add value, and then we're going to talk about execution. If we have some time, we'll talk about some like activities just to kind of keep in mind what you need to do to set yourself up. And if we can get to some questions, great. But listen, I promise you, if we did not get get to your question today, which we're likely not going to. Someone, from one of these three guys or all of them will get a hold of you and make sure we answer your questions. All right. So starting off, we're going to talk with talk about the target markets. We got so real estate investors. We got self-employed. You got people not born in the U.S. So people not born in the U.S. Brian, you're going to take that self-employed. John, you'll take that real estate investors. Tom, you'll take that. Tom, start us off. Talk to us about the target market of a real estate investor. A little bit of summary about the mindset of these borrowers and what kind of products we could use to serve them.
Yeah. So if you're in a market or in your market backyard, right, wherever you're doing business today or wherever you want to do business, I would highly recommend understanding, the demographics of the market that you're in. So, for example, in Texas and California, they're Georgia. Those are top three states in the United States for investor transactions. Close to 30% of the transactions in those states are investor transactions. So, if 30% of your business is not investor, then you're missing out on the opportunity. You're under indexing the market. So how do you tap into the investor, market? So there's a couple ways. You could join real estate investor clubs. Just in South Florida, we have 6 of them in South Florida. Then if you go to Tampa and Orlando, they're there as well, right? So go there. I would highly recommend becoming a product knowledge expert in the DSCR. And so when you go to these investor clubs, you could actually be the loan officer for all the investors, whether they're fix and flip hard money guys. You could be the takeout for the hard money guys. If it's a first time investor, it's a professional investor. Also the realtors. I know we talk about realtors. A lot of realtors are investors. So I would introduce, when you're pitching non-QM to realtors, don't pitch it as, hey, do you have a loan? Hey, let me teach you about this product. And then they will use that product themselves, right? So you're not at the CMLO calling them, asking them for the business. Hey, do you have a loan? What kind of loans do you have? Hey, let me introduce you to this product. And so that goes a very long way, because you're not targeting them, but then now you're educating them, and they're like, okay, I could use that loan for my investment properties. So understand the market, go after the business, and then build a plan. I would say, okay, I'm going to go visit these investor clubs 3 times a month in my local market, and I would go there 3 times a month. Put it in your calendar and make sure you go. And you have to have a plan on how you're going to attack that. So that's one of the things that you could do. You could work. There's actually data out there that you could pull or you could buy to understand who are the investors in the market, like who are actually buying these properties. LLCs are buying these. So you could reach out to the owner of the LLC or a partner in the LLC. You're reaching out to them. There's a lot of conferences outside of your normal, broker conferences and national conferences. There's private lender conferences, right? That's a great place to meet, folks that need investor, solutions, such as a DSCR.
So, all right. I'm sorry. Didn't mean to cut you off, Tom, there.
Nope, I'm good.
Okay. All right. So,
hey, Andrew, if I could just add a couple things. So I think there are some, because people want sometimes to get super specific, but there are some really good websites that I think people can join. Some online real estate communities, biggerpockets.com, nationalreia.org. There's a women focused investor group called the Real Estate Invest her.com. And then there's also just standard meetup type sites like meetup.com, eventbrite.com. If you go to those sites, you actually can find local real estate investing communities in your area. And then the other piece that I think is important is if you don't have any groups in your area, start your own. Create your own group, start your own get together once a week or once a month, once a quarter, whatever it is. And Tom mentioned this, but one of the easiest ways to get into the investor side of the business is to know who's investing in your market. So whatever your target, whatever your geo market is, get with your local title rep and have them pull a list of offsite mailings for your geographic market, and you're going to know exactly who's investing in real estate in your area. The offsites don't always mean they're investors, but 90% of the time they do. And then the last piece that I think people forget about, loan officers don't think about this. We recommend it all the time, is to develop relationships with the private money lenders in your market, the people that you know, the people that are lending hard money in your market. Those people make hard money loans that they don't want on their books forever. They want those loans to come off their books at some point, and they're going to have a list of potential clients. If they're not going to do it themselves, there's a potential referral opportunity for real estate investors in that community that people just don't think about.
Yeah, and it's a small community, right? So if you get focused and you drop and you push into that market, a lot of the investors and know each other. So once you get one or two, they will tell their friends, and your business will kind of grow. It's similar to the non-QM market. The non-QM market is small, but the people that are in it and are really good at it, we all know each other. So that's the same as the investor community in your backyard. Get to know them all. Go to all their their events and become a product knowledge expert there.
Yeah, no, it's great. That's some great stuff there. So next we're gonna go to self-employed. And John, if you can just focus on exactly who the borrower is, a little bit about the loan programs that we have to serve them, and then we can talk about some of the opportunities that we can find. And then after that, we're gonna go Brian to talk to us about folks not born in the U.S.
Yeah, no, absolutely. I think I've said this before. Non-QM, we've kind of moved away from the why of non-QM to the how of non-QM.
Right.
And so to spend too much time talking about self-employed borrowers is a bit repetitive, but I kind of like looking at it pre-COVID, post-COVID, and the U.S. economy has had an amazing reaction since COVID. So if you look at kind of the new business applications prior to COVID, it was running about 300,000 a month for most of the decade before COVID. If you look at what happened during COVID and after COVID, the number of new business applications has jumped to about 450,000 a month. And it's just staggering. And if you think about all those people that started businesses during the middle of COVID, those people have all been in business for a couple of years now and are likely looking for a non-QM loan to replenish cash in their business. And we think it's just a fascinating look at the U.S. economy. So these borrowers are all around you. They exist you walk out your door and you're going to run into a self-employed borrower. The stats on this are amazing. There's more self-employed borrowers today than there have ever been in the history of the U.S. government tracking this stat. It continues to grow. And the other piece that's fascinating about this is what's the best way to say this? It doesn't look at how much how much you're worth. It doesn't look at how much money you have. It doesn't look at the color of your skin. It is blind to all of this. The stats are fascinating. If you look at the number of the people, the geographic makeup of the self-employed borrower is incredibly diverse. And like I said, they're all around you. So the question is, how do you identify them? How do you find them? How do you become? So that first step is going back to what we were talking about, is be an expert. Once you're an expert, then all you have to do is start talking about this. And I've always said there's two ways to do it. The first one is you got to start talking to your existing client base. Start talking to your existing referral sources. Make it easy for yourself. Start talking about non-QM options and the suite of products with your existing clients and your existing referral sources. That's the easiest way. The next piece is you have to start looking outside that. And, I think that if you look at the growth of the potential growth of the mortgage business in 2024, I think the MBA is talking about a 19% increase. Fannie Mae is talking about a 22%. 22% increase. Let's call it 20% increase. If you do nothing, you just keep doing business with your existing referral sources, your business will probably grow by 20%. If you're okay with that, then don't do any of these things that we're going to suggest. But if you want to grow your business kind of beyond that, we think that you should be a member of your local chamber of commerce. This is where local self-employed people go to hang out on a regular basis. It's an old school tactic, but it works really, really well. Most of these people that show up there are local business owners. It's an incredible source. The next piece that people talk about all the time is who knows the borrowers who make a lot of gross income, but write everything off better than your CPA. And every single time I ask this question in a group of loan officers, how many of you are calling on your local CPAs? Maybe 1% of the room raises their hand. This is an untapped market for loan officers throughout the United States. You should be developing relationships with your local CPAs. And again, these people hang out together. Word travels. If you become an expert for them, they will tell their friends. Financial planners, also a great source for non-QM leads. These financial planners understand who's investing, who's self-employed, who has the money, who doesn't. They understand all these things. We mentioned it a little bit earlier. Bank loan officers. We have one customer up in Washington. They have created a database of bank loan officers in Washington. That's their entire referral source, and it's been a great one. Most of these people can't do non-QM loans. It's a great source of business. So partner with the people that you're competing with on a regular basis, and you're gonna pick up some referrals. And then there's a couple other pieces. There's a way that you can do Facebook campaigns directed at business owners in the Facebook community. We think that's still a source of good business. Angel investors. There are angel investor groups in your market. These are people that are funding new businesses, but they also have a history of investment in other businesses. They know other business owners. It's a great source for you to continue to grow your business. And the last couple pieces that I think people forget about is insurance brokers that have lots of self-employed clients, and lastly, business bankers who are lending money to help people grow businesses. And that market in itself has contracted. As we have talked about today, we've expanded our credit capacity. These business bankers have had to shrink their credit box. So they're less able today to lend to these businesses, and they have great relationships with these business owners. So it's another good source of potential self-employed bank statement leads for you.
Just one other thing. I know, John, you put out a lot of nuggets, and I put out a lot of nuggets, and Dacey's up next. But what I would do as the originator, if you're planning into next year, on your calendar, say, okay, I'm going to the Real Estate Investor Community Club once a month or twice a month. I'm going to Chamber of Commerce once a month. Put time aside on your calendar to go meet with CPAs once a month, maybe once a quarter. Go to a CPA or accountant, let's call it a conference. Imagine if you went to a conference, you put up a little booth, and now you're in front of 100 CPAs and accountants to have other CPAs and accountants on their as a part of their team, and you're the only person in that conference that has a bank statement or solutions for self-employed people who have write-offs. Right? Imagine getting in front of those people. No one in your market is doing that today. If they are, they're doing a ton of business, because it's no one's attacking it the way they are, right? So but the most important piece of this entire, I think, let's call it show today or webinar, is put an action plan. Okay, I'm gonna go visit accountants. I'm going to spend 2 hours or 8 hours a month to do this, right? Put it on your calendar.
One might say, Brian, I didn't mean to cut you off there, but I'm just going to just share this, because I just think it's relevant to in terms of activity. Because one might say it'd be a good goal if you're closing 5 loans a month to be at 10 loans a month. Well, I would say that's not even a goal. That's more an objective. Your goal are things you can control. and scheduling, like Tom's talking about, scheduling time to go to networking events. That is part of your business plan, and making sure actually that you say, okay, I'm going to go to a networking event once a week, and then defining those networking plans as they come up, but make that commitment. Just commit to the activity. Brian, anything you want to take before we go into the people
listen,
not born in the U.S.?
Talking about diversifying as the market is changing, and I think the guys have talked about a great way to diversify for getting into a more comfortable situation as it relates to self-employed borrowers, business purpose, all those things. So, ACC is going into our 25th year of being in a position of serving those who typically aren't served, right? So one of the things that we've excelled at, in addition to some of these other products that we've talked about, is really being an expert and leading the way for borrowers that are just not born in the country, but they're here and they're working, and English may not be their first language. Maybe Spanish is their first language. The reality of it is that they're completely underserved, because you all probably have lenders that you work with that say they know how to finance those guys, but they don't. The reality of it is that this group has the expertise to coach you on how to open up another marketplace. Folks that weren't born in country but are in country, they're not citizens. They're probably not going to be citizens because they haven't come in, through the traditional channels. But one of the things the IRS identified a long time ago was, hey, here's an opportunity for us to generate more revenue. So they created an ITIN number. An ITIN number starts with a 9. All other Social Security numbers start with either a 0 through an 8. But any number that starts with a 9 is an ITIN number. That gave the IRS the ability to collect taxes from hardworking folks that are kind of in the shadows. This gives them the ability to verify their income. And there's plenty of cases where we also run bank statements on them too. But the reality of it is, these are programs and borrowers, whether they're self-employed, John, or whether they're business purpose, Tom, or whether they're not born in country, but they are hardworking. The data on the quality of these borrowers, particularly the I-10 borrowers, is second to none. So listen closely. If you're an originator, best performing loans out there, right? Hands down, I-10 loans in our portfolio of execution are the best performing loans. There's probably a lot of shadow income. There's probably a lot of things that we can't document, but there's plenty of things that we do that make them qualify. So they perform great. The number one reason why you ought to look at it is they're not rate sensitive. They want the financing. Right? I would say the same thing about DSCR and self-employed. I mean, it's in the self-employed situation, you're either paying the lender or Uncle Sam. It's cheaper to pay the lender. I think the I-10 borrowers are happy to be lendable and are happy to talk about gaining a piece of the American dream. So again, get yourself comfortable with talking about I-10 lending. We can help you demystify it. We can help you understand where the leads come from. John mentioned a lot of associations that are out there. I was on this webinar in the summer. This topic came up, and I did a quick little Google search and found dozens and dozens of Spanish-speaking or otherwise language-oriented associations in multiple states, including the states that Tom talked about, Florida and California, and I think Texas. So if you just Google those associations in Texas, you're going to find Spanish Realtor Association, Spanish Mortgage Associations. You can find yourself a way to get into those communities, become a subject matter expert where there aren't a lot. There's a lot of fakers out there, I'll tell you. They don't understand, they have it on a rate sheet, they don't understand how to manufacture it. So get with one of us, get with the aides that can help you add another piece of the puzzle. The percentages are growing in terms of I-10. In terms of our portfolio, it's probably about 25%. Could be more. At some point in the past, it was more. So what I can tell you is you're also, if you want to grow, I think someone made a good point, John, you're happy with your 20%, do the same thing. But if you want to do more growth, understand who to partner with, get the education, demystify some of this stuff, because I-10 lending is a great space to be in.
So, if you don't mind, Brian, so we're going to go to talking about finding opportunities. If you can talk to us a little bit about, how do you find opportunities, for I-10 borrowers, for foreign nationals. Talk about some of the suggestions. And by the way, I just want to give credit to who's this Tanya, who says the AI translator works. She actually uses the AI translator to talk to agents and talk to borrowers using the AI translator. So while you might not be able to speak actually a foreign language, AI can help you. But talk to us a little bit about what our audience can do to find opportunities to get in front of I-10 borrowers and foreign nationals.
Yeah, so foreign nationals is a little bit different. Same concept. Foreign nationals are domiciled overseas looking to buy a property here. An I-10 borrower, the way we look at it, is someone that's here in country, right? That doesn't have a social security number, right? So the reality of it is there is a little nuance there in terms of differences. But we kind of talked about this in call prep. But this is so simple, and it's the way to go if you ask me. Get comfortable hiring folks that speak the language. A lot of you folks employ some great people that are not bilingual. I'm not bilingual. I know Tom can understand a couple curse words in Spanish and probably say a few. I don't know. I don't think he would say he's bilingual. But hire somebody that's bilingual, right? Get comfortable around that. Get someone, again, in an operational capacity that can support your originator or you as an originator who can speak Spanish so they can communicate on getting the loans manufactured. So I think that's the pretty simple, low-hanging fruit. Get comfortable hiring folks that don't speak your language. And I forgot who you just mentioned on the call that said AI translator. Fantastic. I love it. Google Translate. That should be a good way for you to either help recruit and talk to those folks that are out there. So again, you've got to have some disruption. You got to find a way to take a little bit of risk. And these are great ways, I think, if you want to increase your business, to do some things a little bit differently. Hire someone that doesn't speak the language or are in English.
Fantastic. Great. So let's talk about one of the things we talked about that were lunch and learns. This is one of the things we talked about. You guys want to share some insights on lunch and learns? Tom, have you done a lot of experience with lunch and learns?
Yeah, we do. Like I said, we do 100 webinars a month. If we do on-site lunch and learns with our partners, and we also do webinars where we could present. Basically, what we'll do is we'll take our 9QM presentation deck and we insert our customers or partners NMLS, their logo, their photo, and then we present on behalf of our partner to their realtors. And so it's more of a high level to introduce them. And the folks that are taking advantage of this, what's interesting is they get more deals from the realtors than from the realtors that have clients. And then if the realtor has clients in the future, they'll reach out to them because they know they have these products. But many times the realtors are like, hey, I need this for a DSCR loan. Right. So it's a great way to create education. I'm a big believer in driving awareness and getting in front of everyone. The more people you can get in front of, the more people know your products and the more people can buy from you. If they don't know who you are, then they won't buy from you. Right. And so that's the most important thing. And one of the things that, this applies to John, when he was talking about self-employed and investors, what I've done in over my career, and I've seen this on the chat, is LinkedIn. I would highly recommend everyone on this call, right? First, connect with me. I'd love to connect with you. I sent you my link. But what I would recommend everyone to do on this call is to go into LinkedIn, under the chat, just type in realtor, and you can do a filter for your town. So realtor, do the filter for I'm in Florida, so South Florida, Fort Lauderdale. I'd hit enter, and you can pick all the cities in your backyard, and then you hit enter, and you connect with every single realtor in your backyard. So now when you're posting about, let's say you want to do a realtor lunch and learn, right? All those realtors now see that you're doing a lunch and learn, and they could all come to your lunch and learn about, non-QM, right? I would also do it. You could go in LinkedIn and type in owner. Those are all business owners in your backyard. Connect with all the business owners, connect with all the wealth advisors, connect with you name it, right? All these CPAs and accountants, I would connect with them, right? So I've actually, there's groups in LinkedIn that have 100,000 CPAs, 200,000 realtors, 500,000 investors. Become a part of those groups. So I've used that in my career. I've connected with every CFO, CEO, originator, branch manager, underwriter, you name it. Like not just in, in every arm that's like, or not, or anything that's kind of connected to the mortgage industry. I've connected to those people, those senior leaders. I would highly recommend people you connect with those important people that you want to do business with through LinkedIn, and then get on a monthly routine of just holding a webinar and then posting that on social media so people can come to your webinar, just like we're doing today. Andrew and John and myself, we all promoted this. We had 150, 200 people on these webinars. We do this all the time. Get in the business of doing that for yourself. Create awareness, drive people to come to you, but you have to connect with these people. That's super important. And once you do, and they start coming and they know you're the expert, you're gonna have to hire people to help you with all the inbounds, because you did a lot of outbounds.
Hey, Andrew, do you mind if I tell you just one quick story on top of that? I know we're running a
Yeah,
little short
yeah.
on time.
Go right ahead, please.
So we had a partner up in Northern California asked me to come up there to do a lunch and learn for a group of about a dozen real estate agents. They were her partners, not ours. They were her partners that she wanted to educate. We spent about an hour talking about non-QM, talking about the different options, bank statement loans, DSCR, I-10. And I was leaving. We finished up. It was a great meeting, great interaction. I was waiting in the lobby for my Uber to go back to the airport, and I overheard a conversation with the loan officer and two realtors. And the two realtors both said to her, wow, that was an amazing use of an hour of my time. I learned so much. And I'm actually thinking about one of these loans for myself. This is actual conversation that I was overhearing, and it was exactly what we keep telling. So it works. Continue to get in front of your sphere of influence. But in addition, the other thing too that's interesting, and I'll say this quietly. Hopefully nobody hears it too loud. But LinkedIn's actually becoming cool. Is actually a cool place so it's one of the fastest growing social media sites. If you look at other growth patterns for other social media sites, it's actually declining a little bit. LinkedIn's actually growing, and one of the reasons why I think it's growing is really important piece to keep remembering as you're creating your plan for 2024. In addition to connecting to all these people, in addition to reaching out, you have to create value. And one of the ways you create value is by educating. And one of the ways you create value is connecting. One other piece real quick that I'll get to, another broker of ours that does this on a regular basis. He gets his sphere of influence, CPAs, realtors, financial planners, insurance brokers, all these people that we've talked about, investors. He gets together with these people once a month. He has an offsite. He meets at a local bar, and about 20 of them show up every month, and they just sit around and talk and get to know each other. The connections that get made, not with the loan officer and the referral source, but with the other referral source partners between themselves, the connections that get made there get made because of the loan officer who established that meeting. They both recognize that loan officer is the reason that they're connected, and that adds value to their business. And if you're adding value to that referral source's business, you're going to get new leads.
Yeah. And look, once you get that connections and you build those connections on LinkedIn, then you got to start posting about, your programs, your features. At Deephaven, we put out content Sundays and Wednesdays, Sunday scenarios and Wednesday wisdom. And our clients take that content and they send it to their prospects and their customer referral base, et cetera. So that if you get on our rate distro, you want marketing, we could send you that stuff. And then now you can start posting that. But I would highly recommend everyone go into LinkedIn and connect with everyone in your market that you want to connect with. Extremely important.
So, one of the things I want to ask, and we've got 1 minute left, but we're talking about a lot of LinkedIn because LinkedIn. You're right, John. I mean, this is the hot place to be, and actually, it's becoming big for younger people. It's not just boomers anymore. So what do you say on LinkedIn? I mean, this is one of the big problems is like people use LinkedIn wrong and they just go right into a sales pitch. So you connect with someone, they've accepted your connection. I'm going to go around to each one of you guys because you guys all have very different approaches. But what are you saying in your first DM that you have once you've connected with that local real estate agent or the local CPA? What do you say, Brian? Why don't you start this off? Then we'll go around to you, Tom. Then John, you'll wrap this up for us and everyone. We just hit an hour. I'm so sorry. We're gonna wrap up after this last question. But I put the email addresses of everyone in there. Reach out to these guys. They'll be very generous. If not their time, their account executives' time. They've got a lot of resources. Brian, what do you say to once you get in when you slide into someone's DM?
Well, you got to offer them something. I think asking for a lead is different than being able to offer them something. You've got to come with a full hand. Here's what I can do for you. But asking a referral partner for a lead is just not worth it. So think through who your customer is, have a game plan, make sure you've got a product that they can use for their customer. Otherwise, you're wasting time.
Fantastic. All right.
If it's me and I'm the originator, here's what I would do. I would take a Deephaven matrix and put your NMLS and your logo on there. And I would send them an email, say, hey, I specialize in non-agency loans that serve self-employed. And I'd go through those people, say, if you ever would like to learn more about these products, I help a ton of, real estate investors, realtors in your back do, with closings. I'd love to help you. If you're interested in learning more, I could even, jump on a call with you and walk you through these options and help you drive more production. But use a Deephaven matrix or flyer and then attach it.
Fantastic. John, what do you say when a broker sliding into DMs? What do they say to get the interest of a real estate agent?
Yeah. So look, we are all in the relationship business. You absolutely have to ask for the business, but I don't suggest asking for the business until you've established a relationship. So that first message to that new potential referral source should be great to get connected with you. I specialize in non-agency business and I would love to be value to your business someday. I hope we can connect down the road. That's the first one. Then you start adding value. Then you start saying, here's why. Here's the reasons why you should do business with me. Then you start adding value. And once you've established the value, once you've established your presence in your relationship, it's at that point you absolutely must to, as a salesperson, I don't care what you're selling, ask for the business, but only after that relationship has been developed. So Mark Stillman has put a note that said he's talked to his CPAs and other financial planners and asked for leads and hasn't got any. My suggestion is keep adding value, keep establishing, keep connecting your referral sources. Find a way to give them a client. That's the best way to create a relationship is give them a client, like refer business to them first, and then ask for that referral.
Yeah, one of the greatest conversations you can have with these referral sources is saying, hey, listen, I want to know who your perfect client is. So when I come across someone that fits that client, I know actually who to bring you to, which then also allows you to have the persona of that perfect client. So you can say, oh, by the way, I mean, this is a scenario that I might be able to help that perfect client. So some great stuff, guys. Always great to have you here. John, Brian, Tom, thank you guys so much. So the next one we're going to do an Ask Me Anything, because so for like this one, we had like already before we even got started, we had 50 questions of people that came up, and I'm not talking about like the just like kind of like the surface questions. How do I do more? But like 50 detailed questions. There's a lot of questions, and I think actually some of these questions, when new brokers see these questions, it's going to inspire you to think of other ways to do business and how to make next year an amazing year. So, gentlemen, thank you so much for joining us, and everyone, thank you for joining us for another non-QM town hall. We will see you for the 6th episode of this season in December. Have a great day, everyone.
Thanks, everyone.
Thanks, Andrew. Thanks, everyone.